Hi everyone, welcome back. Today we're diving deep into IDFC First Bank, one of India's fastest-growing private banks, and its Q2 FY26 performance. The numbers this quarter tell an interesting story: strong loan and deposit growth, improving asset quality, but also some near-term margin pressures. Let's break it down in detail. Starting with the headline numbers, the bank posted a net profit of about 352 crores. This is a huge 75% increase compared to the same quarter last year, which highlights a strong turnaround in profitability. However, compared to the previous quarter, the profit declined by nearly 24%, showing some short-term headwinds. The bank's net interest income, or NII, came in at 5,113 crores. That's a 7% jump year-on-year. This tells us that the core lending business is growing steadily, which is always a good sign for a bank focused on scaling responsibly. But the operating profit fell slightly to 1,880 crores, mainly due to higher provisions. That means the bank is setting aside more money to cover potential loan losses, and also because of increased fundraising costs. Looking at the balance sheet, we see strong growth momentum. The loan book expanded by an impressive 20% year-on-year, to around 2.66 lakh crores. This was driven by growth in retail loans as well as in the SME segment, indicating a broad-based increase in customer business. Deposits also grew significantly, rising 23% to about 2.69 lakh crores. This shows a widening customer base and growing trust in the bank. Next, let's talk asset quality, a key concern for any bank. IDFC First Bank reported improvement in its gross non-performing assets, or gross NPA, which declined to 1.86%. The net NPA also improved marginally to 0.52%. These numbers suggest that the bank is managing credit risk well and improving the quality of its loan portfolio. On the capital front, the bank's capital adequacy ratio remains strong, providing sufficient buffer to support growth and investments in digital banking. What's driving all this? IDFC First has been working to build a strong retail deposit base, and it has also shifted its focus towards safer, secured lending like home loans and small business loans. This shift helps stabilize earnings and reduce risks over the long run. Plus, the bank's push into digital banking has improved customer acquisition and operational efficiency, meaning it can serve more customers at lower costs. Turning to the stock, shares are currently trading around the 72 mark. For those looking to invest long-term, the ideal entry range is between 65 and 70, a good opportunity to accumulate shares given the bank's growth potential. If you're holding the stock already, short-term profit booking near 80 to 85 could make sense due to possible volatility from sector and macroeconomic factors. A staggered buying approach on dips is wise to manage risk. Looking ahead, analysts generally have a positive outlook. They like IDFC First's steady growth in retail and SME lending, improving asset quality trends, and strong digital execution. However, they do expect some near-term margin pressure driven by higher funding costs and rise in provisions. So watching the net interest margin, or NIM, will be important in upcoming quarters as deposit cost improvements could boost margins. In summary, IDFC First Bank's Q2 results demonstrate strong top-line growth and improving asset quality despite margin pressures. For long-term investors, this remains a solid growth and value play in private banking. Short-term traders should watch for profit booking zones and seek fresh entry points on dips. Thanks for watching today's update. If this analysis helped you, please hit like, subscribe, and click the bell icon so you don't miss our future videos on market updates and stock picks.